Hello, this is Edmund Shing from BCS asking, have we hit bottom in emerging markets? We're going to cover several topics. We're going to look at Russia and Chinese stock markets. We're going to look at safe haven assets such as gold and silver and government bonds. And then we're going to look at developed stock markets. Here we have the Russian stock market in dollars. This formation here could be a bottoming formation. It's what we call a hammer in candle terms. So it could be that Russian stocks are ready to bounce even in dollars. Here we have China. What is interesting is that people are worried about Chinese growth slowing, reflected here in the falling Chinese large cap index driven down by banks. However, Chinese small caps in green have done really well. So maybe Chinese worries over growth are overblown. Here we turn to commodities. In green we see the copper price, which has hit bottom and may be turning up here, driven down by worries over Chinese growth. However, other commodities, represented by this commodity index in blue, has actually done very well. So these commodities give a different message to the negative message from copper. Gold and silver represent some of the beneficiaries from a safe haven move on the back of worries over Russia and China, and have broken from their downtrends from the last few years. Government bonds have also done well with this risk-off move, namely European bonds in particular have done very well. Well, what is perhaps more interesting is this ETF of emerging market government bonds denominated in dollars, which again, having fallen for a lot of last year, are now rising. Remember, this gives a yield of over 6%, so it looks attractive right now. If we look at this risk index on page 9, this is a macro risk index. Normally above 0.5 you get worried, as we've seen in the past. Currently we're at 0.4, so we're not in the danger zone yet, despite what is happening in Russia, despite the worries over China. And finally, within developed stock markets, peripheral European countries seem to be doing particularly well. Greece, here in blue, you have here Ireland and Italy, all outperforming the benchmark Eurostoxx 50 index, suggesting that better to focus today on the likes of Portugal, Italy, Ireland, Spain and Greece, rather than other countries such as Germany and France. To summarize then, emerging market bonds to me look interesting, as do certain emerging market stocks which represent extreme value, notably in Russia and notably in China, particularly small caps. I think emerging market government bonds look very interesting right now. Again, if you look at the ETF, this is largely denominated in things like Brazilian bonds, Polish bonds, and that looks interesting with a yield of over 6%. Gold and silver clearly are benefiting, and I think there is a good chance that this continues to go up, fueled by very strong demand from gold from Chinese consumers. And finally, within developed stock markets, you should favor the likes of Italy, Ireland, Spain and Greece, as these stock markets have the strongest momentum and are still relatively cheap and are seeing slowly recovering economies. This is Edmund Shing saying thank you for listening.